Hello everybody. So this video is entitled Mr. Market Likes Growth After All. Mr. Market is manic depressive. He was selling off everything 3 weeks ago and now he seems to be bullish again on many of the stocks I cover on the channel. So good for you, Mr. Market. In fact, we've had a pretty stark increase in the fear and greed index. We were way down in extreme fear just 2 weeks ago. And now we're almost getting back towards neutral. Give it a couple of days, we'll be back towards neutral. We're slightly fearful, but not that much. And if you look at the crypto market cap fear and greed index, it's the same story. Fear has clearly abated in the market, and the markets are bouncing back. And of course, in these periods, I believe the Nasdaq will do much better because it's much more growth-oriented than S&P. But the Russell 2000, which are small caps, and on this channel I cover a lot of small caps, this one is running, setting new highs, so this is a really good thing. Very happy, for the stocks that I cover on the channel. And the odds of a rate cut, they keep increasing. Now, Cal sheet telling us 93% of a rate cut. I think the market is pricing in that rate cut, anticipating that rate cut. Maybe on the rate cut day, we're going to have a sell the news event. But the market is anticipating that. So, yeah, things are getting back to normal. So this is a celebration. So let's talk about HIMS. So let's be very clear. HIMS never deserved, but of course many of these stocks have been battered and they didn't deserve what the market did. The market is crazy. But HIMS, especially in my view, never deserved to trade below 40, especially after that Q3. I won't go back over how good the Q3 was. I've said that in pretty much every video I've covered HIMS. I was very impressed by the rebound in their revenue growth. Today, I want to talk briefly about international developments. HIMS is still dirt cheap at a 0.12, despite being up 8% today. About 2%. Was it 2%? Was it 2.5% yesterday? So let's go 10% over a two-day period. It's still dirt cheap at a 0.12, but HIMS is now doing a very good job because they concluded, they finished the acquisition of LiveWell, and so they are rebranding the platform. And LiveWell is a Canadian telehealth company that they acquired, and they're rebranding the platform LiveWell X Hims and Hers, right, as it is done in social media these days, modern logo, and you gotta click, go to HIMS, go to Hers, and if you click, what is it that happens? You go to the Canadian version of HIMS and Hers, and so that's the HIMS website, Canadian version, ED, weight loss, acne, ED and acne, that was, the early days things of HIMS, but they're going strong with weight loss, of course, in Canada, given that semaglutide is off patent in Canada starting in January 2026 because a company named Novo forgot to renew the patent. So that's why they're going after Canada. I think Canada is probably about 50 million people these days. For the longest time, it was 40 million. Anyways, it's at very least 40 million people. That is the target market, and you can see they are talking about LiveWell is now HIMS and Hers. So they changed the branding. They are changing the branding whenever they go in these foreign markets, which brings me to Zava. I think at some point Zava will also change its branding to HIMS and Hers. Or is it only something that you would do in the English-speaking markets? I still think they're going to do something about the branding. Because if you look at the UK market, it's forhims.co.uk, and you can see it's a very similar website, except, they just use British English, talking about a GP and a letterbox and using S's instead of Z's. But that's it. Like the branding is coherent between the United Kingdom, Canada, and the United States. And my guess is that we are going to try to get the same branding across other countries in Europe. Of course, they're in Germany, they're in France, they're in Ireland, they're in all sorts of random countries. This is a copy of their French site right there. I wanted to show that they are kind of setting up to be hims and hers, because if you see this one, Santé Masculine, Santé Féminine, that's hims and hers essentially. So you could create two websites based on that. And it looks like they're getting a lot of legacy businesses from Zava. So that's for contraception right here, an example, right? But they don't bundle the cost with a consultation. They have a medical fee. They have people pay for their medical visits. So they're going to have to find some sort of consistency between that and what is going on, because they are charging for a visit. So they're almost following a LifeMD strategy for their Zava acquisition. I don't know how long it's going to take, but I think they're setting themselves up very, very well to have a hims and hers European version. My point is, hims and hers is on its way to go global, and they are going global, and they are going global early. And so what do we know about firms that go global early? They are setting themselves to be potentially big tech type firms in the future. And that's kind of what I believe with HIMS. HIMS is setting itself up to be a big tech firm in the future. That's why they have one platform, one app, one coherent marketing, one world. And this is the beginning of that. And you can imagine how difficult that is with regulation and everything like that. But I think this is where we're headed. And they are clearly executing, whether it's Zava in Europe, whether it's forhims.co.uk in the United Kingdom, or whether it's the LiveWell acquisition in Canada and already having rolled out hims.ca and hers.ca. They are executing. And I'm very happy to see that. Okay, let's move on. Tesla. So, of course, Tesla you can't cover in a minute. It's impossible. Tesla is continuing the bounce today. A few things to say. First of all, a lot of technical analysts are like super bullish on Tesla and the fact that it held like between like 440 or 450, and they're saying, oh, now it's going to the moon because it like held a key support. So I'm not a technical analyst. I don't know that type of stuff. I'm here for the long run. So to me, I'm fine. I think the optimism still comes from the market pricing in Optimus bot, and also potentially pricing in, FSD, even though it should already have been starting to price FSD and Robotaxi a while back. I want to go over this chart today. And of course, we're happy that Tesla keeps going up. But whenever Tesla goes up, you have people who tell you, oh, it's a bubble. Oh, it's a bubble. Typically, people who can't read a balance sheet. Typically. For example, did you know that General Motors or Volkswagen, they have more debt on the balance sheet than they have equity? A lot of these companies are house of cards. Stellantis, if you look at Stellantis, they have so many claims because they put a bunch of defective engines in their cars, and their cars are like breaking after like 40,000 kilometers or something like that, and especially I don't really know, but in a lot of the legacy French cars that they got a big engine problem, and I can tell you that nobody in France wants to buy a Stellantis car anymore because everybody knows about that issue of those motors breaking. So and Ford, the CEO is talking very openly about how they're going to have a very hard time making it, right? And BMW and Mercedes-Benz and Volkswagen, they have their own problem. They're closing their plants, etc. Yeah, BYD also has all sorts of problems, by the way. So when I look at all these companies, I don't think it's a fair comparison at all. Toyota, I think, will be okay. And I'm not the only one thinking that. I think Toyota will be okay because Toyota is kind of a leader all over Asia, all over, kind of, emerging countries. Toyota is an absolute leader in small cars and stuff. So I'm not too worried about Toyota. They make inexpensive cars. But I'm more worried about all of these small players. And yes, Tesla is absolutely hurting them. And when FSD is becoming popularized, as you see in Europe right now, a lot of people are discovering FSD in Europe. You even have regulators in Europe praising FSD, people who had been anti-Tesla for the longest time. I think people will realize that these cars are software. They're software driven, and I think most people are not going to want a car who don't have good software in a few years. And so in my view, they're going to take over. Tesla is going to take over an enormous amount of market share. That has been my thesis for years. My thesis has always been iPhone versus all other phones. Teslas versus all other cars. That's my thesis. I don't think I've been wrong so far. Teslas litter my neighborhood. They are all over my neighborhood. All over Texas, I see them. And Texas is an oil and gas state. And I see them everywhere. And even then, we don't matter. It doesn't matter. We don't care about this because most of the valuation of Tesla has nothing to do, of course, with cars. Most of the valuation is Tesla is AI, energy. Don't forget, Tesla is also a gas station network. So gas station network, AI, energy with their mega packs, growing super fast, that division. And by AI, we mean FSD, and now we have Optimus on top of that. Tesla, let's not forget, is also a tremendous business model innovation. They don't have dealerships. Because they don't have dealerships, they can move so much faster. They don't suffer from the brand damage that dealerships can do. They don't suffer from the pushback that dealerships can do. I could easily imagine. Actually, if any of these gas cars, if you wanted to launch a new gas car company and you just didn't use the dealership model, you could probably get a tremendous amount of business from all of these legacy players just because people don't have to go to a dealership. And if you look at the data, people would rather getting a root canal. They would rather get a root canal than go to a dealership. Another spin of that is people would rather sit in the middle seat for 10 hours on a 10 hours flight than actually have to go for a dealership. So anyways, people don't like the dealership experience, and Tesla is solving that. They want to buy a car like they buy something on Amazon, and Tesla is solving that. So that's another aspect. Of course, you don't need to agree with me on any stock. You don't need to agree with me, on any of my bullish stances. But I'm very bullish on Tesla, and it is my largest position. And I think it's going up quite a bit next year. So anyways, let's continue. Let's talk about Cleanspark. So we need to talk about the incredible madness of Mr. Market here. Cleanspark on October 15 was $23 a share. Now it's $9. Not now, but 2 weeks ago it was $9.73 a share, and now it's back at $15 a share. So the volatility, as you can see, over the long run, the volatility of the asset is a return. If you buy an asset who can drop 50%, who's capable of dropping 50%, you're also buying an asset who's capable of going up 50% in next to no time, which is what it did, right? If you had bought at 973, you'd be up 50%. Right? So Cleanspark, of course, that drop made absolutely no sense. Especially when we had Q3, we had the CEO reminding us that they are in talks with two hyperscalers for their Georgia site, especially the Sandersville site. You may remember my video. I made this video when the stock was trading at $11, and I was flabbergasted that this stock was trading at 2.5 times EBITDA. 2.55 times EBITDA. If you remove the Bitcoin on the balance sheet, this stock was trading at 2.5 times EBITDA. A mall who's going out of business next year trades higher than 2.5 times EBITDA. So the market has no idea how to evaluate these companies. And to me, that was a screaming buy at 10. Now it's 15, it's a little higher, but it's going up. So if you're in this one, you're happy, you've been rewarded. Let's talk about Nebius. Nebius is the same story. The stock went up to 140, and the market forgot overnight that they had a deal with Microsoft that would literally 16x their revenue next year. 16 times their revenue. Between the Microsoft and the Facebook deal, which got convoluted with the earnings, and nobody really paid attention to that deal because they announced it with their earnings. I think they should have announced the Meta deal. I think they should have announced it at a different time than the earnings, wait a week to announce it so that the market kind of digest the news. So anyways, they didn't get that bounce that we expected, but they got two hyperscalers, Meta and Microsoft. Their revenue over the next 12 months is going to between 10x and 20x, depending on how they execute. So because the way I value stocks is very favorable to super high growth companies, enterprise value over gross profit over revenue growth for Nebius is 0.052. which is absolute nonsense. It's so cheap on a growth-adjusted business basis. And so I like Nebius very much. Cipher ran a lot too. Unfortunately, Cipher is kind of the one that got away. It ran a lot too. It had become so compelling and it ran a lot. And of course, as always, the one that never runs is Mara. And as you know on this channel, I'm really good on sitting on a stock for years and waiting until it pops. And then people realize, oh, it popped out of the blue. That's the story of people who own SoFi, by the way. As you know, I own SoFi. SoFi did nothing for 3 years and a half, and then boom, it popped. And now we're at $30. Same for Tesla. Tesla was trading at 200 plus or minus $50 for like 3 years, and then boom, it popped. You can't predict when these assets pop. You just can't. I just know Mara is free. Mara is trading below the value of its Bitcoin bag, so it's free, and they have a very similar strategy to Cleanspark. Dispatchable compute, the use of prefab containers, prefab AI factories, right? And I showed you in my last video where there's a few startups who do AI GPU factories, like data centers that you can just drop on a site, and it's a container, and you drop it on the site and you power it up. Mara, it's Mara's entire strategy. The market is giving no love whatsoever to Mara, and let's not even forget about the Exion acquisition from Mara. Like they acquired this French company for dirt cheap. So that's another thing. Mara has a quantum computer now. I don't know how good it is, but they have a quantum computer now in Canada. Oh, and they own Auradine. So they own a manufacturer of Bitcoin rigs. They own a Bitcoin rig manufacturer. They don't own it all, but they have a big stake. They invested in it. They have a big stake. So I think the market is having such a hard time valuing this stock, and they get caught up on dilution. But here's the thing. If you don't want to sell your Bitcoin, you have to dilute. You see, Cleanspark decided to stop diluting because it wanted to talk to Wall Street. But, you know, I was not that happy when Cleanspark said, I'm going to sell Bitcoin in order to, quote unquote, be the adult in the room. You know, to me, it makes a lot of sense to dilute your shares to keep the Bitcoin on the balance sheet. I think it's more tax efficient. Cleanspark actually was doing that for the longest time. But, you know, right now, like we feel right now that Cleanspark got rewarded because it bounced right back to 15. But ask yourself, when it was at November 21 at $9.73, they changed the CEO, they did everything that they did, and the stock was trading the same as it was trading 6 months ago, right? So we really need to zoom out of these stocks and realize that the market is irrational. And anything data center related or Bitcoin related, if it's not going to be owned for multiple years, perhaps not owning at all is a good idea. That's kind of my take. So anyways, last stock today is KULR. KULR, I've been into KULR for about 5-6 months. It's been a roller coaster. Now, I love a roller coaster because a roller coaster is a stock that can go down 50% and go up 50%. KULR has been a roller coaster. The market liked the stock before Bitcoin was in the picture. Then Bitcoin got in the picture, and so they bid up KULR to crazy heights, like $20. And then KULR got associated with a DAT trade, and it crashed to like $2 or $2.30 or something like that. So KULR is essentially a stock that has been capable of doing a minus 90%. So if a stock is capable of doing a minus 90% in no time, that stock is also capable of doing a 10x in no time. That's kind of my take, right? That's kind of how I look at this thing. That's why for this type of hyper volatile stocks, the only way to approach them is to be super DCAing, taking your sweet time, just DCAing over very long periods of time. That's the only way, in my view, to get exposure to these stocks. But the market is realizing that they might have overdone the sell-off for KULR because it's down 13%, was down 9%. KULR is a company who's ramping up production of its batteries. They have batteries on the moon. They have batteries on Mars. They do space batteries, and they do harsh extreme environment batteries. Understand, military batteries, right? So they created, for example, a radiation tolerant BMS to put in satellites because there's a lot of radiation in satellites, and battery management systems don't really work. they created a lot of thermal barriers to avoid thermal runaway. Like, for example, if you're going to send a $100 million satellite, you want to make sure your battery in there doesn't have a thermal runaway and ruin the whole satellite for a cheap battery. Same for military equipment. They don't want to have a cheap battery because if there's any issue, then you could have a catastrophe happen. And they've been gaining deals with the military. They've been getting deals with drone. Now they're kind of investing in this KULR One design that they're going to manufacture in Texas. So that's part of energy strategy or military strategies. It's part of energy independence. Anyways, same. They're providing a 400-volt system for this drone takedown lasers. So they're doing a lot of stuff. And they're growing revenue 116%. Their revenue grew 116% year over year. So when I first discovered KULR, I was like, okay, well, this is ideal for me. I'm finding a company who actually has very high revenue growth, who has a hyper growth underlying business, but also owns a bunch of Bitcoin. And of course, now KULR is trading at about 50% premium to the Bitcoin on its balance sheet. But when this stock was $2, this company was essentially free because it was trading under the value of the Bitcoin. It was trading under the value of the Bitcoin. So again, another very much misunderstood company. I think space is going to be a very hot sector in the coming years. And to me, owning something in the space sector with the margin of safety of Bitcoin, I see this as kind of a lower risk investment because no matter what, they got the Bitcoin on the balance sheet. So the Bitcoin, in my view, is going to act as a floor. It's going to act as a floor to the stock. So, when Bitcoin 10x's, which in my view it inevitably will in 2031, 2032, well, this stock necessarily will be at the very least $1 billion, at the very least, because they'll have 1,000 Bitcoin. So that's the kind of a theory behind that. So anyways, as you know, this is not investment advice. This is not financial advice ever on this channel. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe. Follow me on Patreon. Follow me on X. Thank you for watching and have a wonderful, wonderful day.